back to another episode of Beating Alpha. This is episode 120, and we have a very special guest on. Very happy to introduce you to Josh Plave. So, Josh is a multifamily syndicator who specializes in helping investors use their retirement funds to passively invest. Through his company, Wall to Main, Josh provides all the tips and tricks needed to invest quickly, safely, and inexpensively with an extensive existing retirement account. And of course, for more information, you can go to the website and check it out, walltomain.com. And there is a cool feature. It's called UBIT Calculator, which of course we're gonna cover that in the podcast today because I don't have a clue what it is. But of course, Josh will give us an introduction on that too. So Josh, I just want to say a big thank you for being today on our episode. I appreciate it.
Thanks for having me. I appreciate it.
No, it's my pleasure for sure. So, look, so maybe let's go back to the kind of beginning stages and I would like to hear your personal story because I think stories are very cool. They're very interesting. Everybody has kind of their own personal story. So if you kind of talk about your entry point into multifamily syndication and what you did prior to that.
Yeah, absolutely. So like Martina said, I specialize in retirement accounts, and you might be wondering why a guy as young as I am talks about retirement. So kind of to take it back before even my my personal business career, I actually started investing when I was 16 years old. I opened my first Roth IRA at 16. I took the money I earned as a camp counselor, and I said, hey, I've already paid taxes on it. I may as well start investing with it. And so my mom and my grandfather, they were both CPAs. So they kind of instilled this idea in my mind of preparing for the future and investing, with forward-thinking values. So I put it into what I knew at the time. I was really big. I was a 16-year-old. I was really big into aviation. So I invested in, military and aerospace and airlines and everything, and did pretty well over the next 15, 20 years. So that was nice. I've since moved out of it, but between then and now, personally, I became a business analyst, working for business operations, working within business operations for Fortune 500 companies. So I am pretty well versed in terms of digging into numbers. That's why I got involved in multifamily, because I was really comfortable looking at large spreadsheets and just kind of diving in and being able to tell a story based on what you see with numbers. In the midst of all of that, my mother and my grandfather, who I'd mentioned earlier, they both actually passed away. And so what happened there was they actually they were nice enough to leave myself and my sisters with essentially the retirement packages of a baby boomer and a member of the greatest generation. And so I needed to figure out what I was going to do with their legacy, what they had left us. It wasn't a life-changing amount, but I needed to make sure that I was taking what they had built over their lifetimes and continuing that spirit and that the legacy that they had left behind, and making sure that we preserved it. I couldn't just put it on the first investment that I thought was really great and hope that it worked out and kind of blow it up all in one time. So I went and educated myself, and we can get into it in a bit, but landed on multifamily eventually.
That is beautiful. Okay, so I think the one question that, it popped up in my head, so maybe one of the listeners kind of had the similar question that probably they want to ask, is what makes multifamily different than the other asset classes, like office space or, storage or whatever that might be, or maybe single family residential kind of investment. So why multifamily in particular?
Yeah, so it really came down to two factors for me. The first was when I started kind of looking at everything before I dove in. So I went straight into multifamily. And the reason for that is I was kind of educating myself with all the podcasts, all the webinars and the meetups and books and everything that you can possibly get your hands on. And I wanted to find kind of what the right niche was and what the right sector of the industry was. I ended up going to a seminar where someone involved in multifamily ended up making a presentation. And the one point that really stuck with me was, anytime you're over 5 doors, it becomes a commercial, loan, it becomes a commercial property. So you need to take a look at 5 doors the same as you're looking at 50 or 150. It's the same process to close on everything. And the nice benefit of going to something larger, I personally focus on 100 to 250 units. And the nice benefit of going to something larger is you have a huge team behind everything. It's not just reliant on you. So if you're going into single family homes, the bank's not going to make sure that it's a good investment. They'll make sure for them if it's a proper investment if you're buying for a price that they agree on, but they won't take a look at rent metrics and all the things that go into making it a proper single family home investment. But when it comes to multifamily, there are so many people behind you. There's lending brokers, there's insurance brokers, there's all kinds of people who can help backstop you and make sure that you are protected and getting involved in a logical investment.
Yeah, so I'm sure the commercial bank is not gonna approve a loan if because they do their own kind of underwriting and due diligence to make sure that the property is actually gonna work, right? So it's gonna be
Yeah,
producing business, and that's what they're looking for.
it needs
Okay,
to pay up for them.
exactly. So okay, so can you talk about like AUM currently, or maybe the future, and like what the type of deals you're gonna be looking for?
Yeah, so I so far have GP'd myself one portfolio. It was two properties for 173 units in Lubbock, Texas. And I am personally passively invested in a few others as well. So total portfolio of over 700 units. But yeah, that's been my track record. I've done it mostly through retirement accounts. Prior to getting multifamily started, I knew that to get multifamily started, it would actually take a little bit of legwork and a little time to actually, get things up and running. So I started actually with private money lending. It's a great strategy for retirement accounts, which we can get into in a bit. But it was an opportunity for me to move things into real estate, but also keep velocity of capital up because I could get into a private money lending deal quicker than I could with multifamily. And so we did that, and we're slowly transitioning over to multifamily as well.
Okay. So can you talk about the state? I mean, is Texas that something you're going to be looking forward to in the future too when it comes to acquiring deals, or are you going to be looking at different states?
Yeah, absolutely. I think Texas is a very strong market. I personally, my favorite market is North Carolina. I'm actually moving there in a month or two.
Nice.
So yeah, it's there's plenty of in the Southeast in the Sun Belt region. There's plenty of opportunities for burgeoning markets that provide a lot of the right values behind a diverse job base and a strong economic background with good employers. And as a capital raiser, I kind of approach things slightly differently than I did when I was looking for acquisitions. When I approached it from an acquisition side, I specifically was looking at very individual markets and working with brokers to make sure that I was finding the right properties in the right markets. With capital raising, I have partners who are working that side of things as well. And then when they bring a deal forward, I'm able to kind of help them with due diligence and take a look at the same time while we're going through due diligence to make sure that the market is something that that fits my profile for my investors as well as myself.
So what will be that kind of underwriting criteria? What type of deal specifically are you looking for?
Yeah, we're looking for value add workforce housing, the typical, class C plus, class B, 2 to 3 stories, things of that nature. We're looking for, mostly a value add aspect of things, especially with, how low the cap rates are now. We want some sort of a value add component that allows us to go in and force appreciation and build value for our investors.
And how the deals are going to be structured?
Yeah, they're syndicated. They're typical syndications, so they're 70-30 splits. We typically offer an 8% preferred return, and yeah, it's pretty cookie cutter as far as things go.
Got it, got it. So I want to kind of expand a little bit more for, on a retirement, like Roth IRAs that we kind of spoke before. Like you have this particular niche of, like people, you want these people to invest in. So what is like, I understand the story is coming back to, to your kind of family but like, what is the reason that you chose kind of this particular, like kind of niche of people?
Yeah. So the reason I got into helping folks with their retirement accounts and getting involved passively is when I went to get started with my retirement accounts, there's It's really hard to get the information and the right information. It's kind of scattered all across the internet. And it took me a year or two to actually collect all of this information. And I realized how difficult it was. And I slowly realized that people were coming to me for questions and answers on what you can and can't do with your retirement account. And so I ended up building Wall to Main purely because I haven't found one singular site that allows you to find everything that you can and can't do with your retirement account. And not only that, a site that doesn't try to sell you anything. People can invest with me if they like, but at the same time, if they don't, there's still plenty of information there that I'm happy to give up to them and help them on their investing journey. Most of the information that is given out in the retirement account space for real estate is done by custodians. And so what they do is they'll give you a lot of information that helps you get motivated and get things going, but not enough to make you realize that you have options beyond just that one custodian. There are two different account types, and we'll jump into it. And those two account types are custodial control and then checkbook control. And so the custodians will tell you all about how you can do things and open up this custodian account, and they'll completely leave out the fact that there's checkbook control. And as somebody who doesn't get paid to say it, checkbook control is superior in my opinion. It's quicker, it's faster, it's cheaper. So I basically just want to provide this, this resource for folks who are like me and need to get started and make sure that they're not letting other people take advantage of the funds that they have in their accounts.
Got it. Good, good, good. So what is the future goals? I mean, when it comes to, again, we kind of talked about it a little bit, but like AUM, like what is the goal for this year? How many units are you planning to, of course, maybe if we go back to the point, of course, and sourcing deals, like, because, like current times and like the state of Texas, there's a lot of, like, when it comes to sales volume, there's a lot of sales going on. There's a lot of transactions, right?
Yeah, absolutely. And so the goal this year was to close on at least two more deals. And things dried up quite a bit this year in terms of deal flow. So luckily they've come back. I've been taking a look at deals currently, and it's interesting. Deals are trading at pre-COVID levels, so we'll have to see. If stimulus starts to dry up, then we might see prices start to drop a little bit, and things take a reality check, come back down. So we'll see about that. I've been taking a look at things this year, and because my investor class is a little different, the investors that I bring to an opportunity are a little different, and they require different things. And we'll get into this when I talk about the UBIT calculator. I have to take a look at things based on the type of taxes that might be present when investing with your retirement account. So the deals that I've seen come across, I've had opportunities to bring my investors to these deals, and it just didn't check the boxes for what we're looking for. So there is deal flow out there, and there are people closing deals, and it works really well. Honestly, I'm a fan of a lot of these deals, but certain types of investors need certain things, and it just so far hasn't fit for us. So I'd like to close on a deal this year. I realize it may not happen, but we're going to try to get started really strong in the next year. As I said, I'm moving to North Carolina, so I'll be a lot closer. I currently live in Denver, so I'll be a lot closer to the markets that I try to focus on.
Got it. So can you talk about the process that you talking with these potential investors in your deals? Because again, it's a specific niche, so maybe you're going to have kind of specific approach that talking with these type of people who are looking to invest with their retirement accounts.
Yeah, so basically I try to introduce people to the fact that they can use their retirement accounts in multifamily. When I got started in real estate, I thought I could just buy a single family home with my retirement account, but you can actually apply leverage to your account. And so multifamily works really well because retirement accounts can actually only accept passive income. And so you can't buy a single family home and then say you want to flip it. You can't actually go into the house and swing a hammer. You have to basically allow other people to work the deal. You need to collect just rental income or capital gains. Those are really the only two methods that you can go about. There's interest income and stuff like that, but things have to be purely passive. And so multifamily fits really well with that. And that's kind of why I try to help people understand that they can use their retirement accounts to passively invest in multifamily. When I talk to my investors, I try to get a feel for what they're looking for. Some investors want basically an equity multiple, and that works really well in a retirement account. And some folks are actually over their retirement age. So you can start taking distributions from your retirement account when you're 59 and a half. And so one of the strategies I like to use with my older investors is, let's say you're 62 and you actually want some cash flow to come and help support your day-to-day lifestyle. If you invest your retirement account in a deal that's going to cash flow immediately, or it's going to have strong cash flow, you can actually use the cash flow that comes into your account, then take a distribution from there and allow the current investment that's in your retirement account to actually help your current day lifestyle.
Okay, so can you talk about the UBIT calculator as we spoke about? How does that come in play into the retirement investment?
Yeah, so that's the key behind kind of where I can help figure out what the right investment is for folks who are investing with a retirement account. So when you invest in multifamily with a retirement account, you would typically see most retirement investments be purely tax-free, and it's not the case in multifamily. So what happens is your retirement account was built to basically incentivize you to use your tax-deferred dollars. And so when you're investing in a leveraged property, what you're doing is you're taking your tax-deferred dollars, you're applying it to a building, and then you're actually using non-tax deferred dollars. So you're using the bank's dollars to help build your own tax deferred dollars. So what that means is that you're actually going to have to pay a tax on the portion that is leveraged. So let's say you buy a multifamily property with a 25% down payment. The 25% down payment is the money that you put in with your retirement account along with other investors. And the 75% is going to be brought in from a bank. So that outside money is going to be leveraged non-tax deferred dollars. And so you have to pay a portion, your taxes on that portion. You don't pay a tax on the portion that is equity ever. So what's nice about this is you have to pay a tax on 75% of your income, but you actually can use 75% of the losses like depreciation, operating expenses, and interest expenses. And as you pay the loan down, this ratio tends to, it changes as time goes on. And so the two concepts in play here are called unrelated debt financed income. And so that unrelated debt is the bank's money that you're bringing in and helping out your IRA. And so that is income. You then pay UBIT, which is unrelated business income tax. So you earn UDFI and you pay UBIT. And so a lot of people go out and they kind of they naysay and they say, hey, UBIT's terrible. It's really, really detrimental to an investment. I wouldn't use your retirement account to invest in multifamily. And I got kind of tired of people just kind of being ominous and telling you this big, vague, term that they were going around and saying that you shouldn't invest just with a pure hypothetical. And so I used my background in Excel and analytics, and I went ahead and built something called the UBIT calculator. It's the first of its kind, and it actually allows me to take the projected earnings that a multifamily investment, will have or hopes to have, and then I can take those projected earnings and give projected taxes at the same time. I'm not a CPA, so it's not a guaranteed number, but it gives you a rough ballpark estimate of what the taxes would look like based off of the rough estimates. And so with that, we can take a look at certain types of deals, which deals are more finely tuned for a retirement account. So going through, all of the different deals I've come across, I've kind of gotten an idea of the structure of deals that I like to bring my investors to. And it's really given me a leg up on understanding what's right for a retirement account versus just cash flow.
Got it. Okay, so talking about that, is there some specific things that people should know about before they will come and invest with their retirement accounts? Maybe, kind of when you raise capital from limited partners, it's kind of, like 50K entry point, like minimum amount. So how does that work for the people who come with their retirement accounts? And maybe some specifics that they should be aware of.
Yeah, it's honestly the same. So when you eventually get things up and running in your account, you can, it behaves a little differently than cash, but when you're getting involved in a deal, treat it just like cash. There are rules behind things that you need to make sure you understand, but yeah, you basically can, if there's a $50,000 minimum, you can take your retirement account and invest $50,000 that way. So it's pretty simple. It allows you to kind of to move pretty well. I like to use checkbook control accounts and it's no different than having a normal bank account. You just pay for wire fees and a small annual or monthly fee that really isn't based off of your overall asset value in the account. So you pay annually something between $130, $180, and then you pay wire fees that are $25 or $35. So there's not a lot of overhead, which is really nice. It's pretty similar in terms of cash in that regard. And then, yeah, you can invest anything from 50 up to however much you really want to invest with a retirement account.
Got it. So in that case, if you're looking to invest with your retirement account, doesn't matter if you're accredited or not accredited.
No, exactly. So it behaves the exact same as cash in that regard. So if you're an accredited investor, your retirement account would be accredited essentially. And so if it's a 506c deal and you're sophisticated, you can't use your retirement account just to get into that deal. So yeah, no different in that regard.
Got it. And is it available for the foreign investors also at the same time, or just US?
If they have an IRA, I don't have any foreign investors, to be honest. And if they do have an IRA or a 401k, then they absolutely can take advantage of it. It's not just an American citizen thing. So if they're a foreign investor who, let's say, is working at an American company and has a 401k or something like that, or they've opened an IRA in America, then they definitely can make use of it.
Mm-hmm. What is your personal view on diversification? Would you believe that at the same time, those people should be investing in different asset classes? It could be, completely different from commercial, like stocks or bonds or ETFs or CDs or, or just kind of full into multifamily. What would be your kind of advice on that?
Yeah, I think it really depends on what your overall goal is and what your interest is. Personally, as a younger person, I'm okay with higher risk because I know that I have a longer time that if I take a dip, I can actually make up for that in the future. I'm still invested in stocks. I shifted most of our stuff into real estate, but some of my accounts are still in stocks, and it's important to make sure that you're across different spectrum of investments. And the nice thing with a self-directed IRA or a solo 401k, these different types of retirement accounts, they're the same as you would have if it was just a normal IRA or a 401k. You can invest at the same time that you're doing, alternative investments. You can do real estate, you can do crypto, you can do stocks at the same time. You can do the whole wide variety of things. So really it's an account that allows you to diversify on a whole different level. Personally, I think the normal IRA and 401k that everyone typically has is more susceptible to less diversification, to more volatility, because they really can only invest typically in stocks, bonds, ETFs, things like that. And so when you open up a self-directed account, you can leave some of that money behind in a typical IRA and then move some of it over to a self-directed IRA and invest into alternative assets at the same time.
Mm-hmm. Got it. So the question is, how do people find you? I mean, of course there is a social media and I got the links for me to include there, so
Yeah.
for the younger generation, of course, those people can, hit the links and they will get access to you. But what about the older generation? Are you available for like coffees and, those type of things? How do you approach these situations?
Yeah, so I'm always open for coffees and things like that. I'm currently in Denver and going to be moving to Charlotte. But in terms of social media, my company is Wall to Main, and so you can find me on Instagram or Facebook. And my name is Josh Plave, so you can find me on Facebook there as well. You can also go to my website, walltomain.com, where I have all of our lessons, plenty of video and text-based content. I'm currently offering a free PDF of the top 10 tips and tricks when passively investing in multifamily with your retirement account. And that'll give folks kind of some relatively unknown tools that help make them make the right investing decisions when using their retirement account.
Got it. And of course, we have to include these links down below to make sure to grab the free PDF. Of course, it's on our website, as you mentioned, walltomain.com. So make sure and hit that up. So the last question that I have for you is, I mean, you're meeting all these people, being on a podcast just like this one, which I really appreciate you being today on episodes. And, you're speaking a lot with a lot of different people. Again, you mentioned 24 podcast episodes you've done prior to this one. So that's really awesome. But what is the thing, kind of when it comes to kind of esoterically the question, but what is the legacy that you're looking to leave behind?
Yeah, it mainly would go behind just it's going to sound so hokey. Just helping others. What I found in the retirement account space is there are a lot of folks educating people for a very self-fulfilled interest of drumming up business for themselves. And yeah, I would love for folks to invest with me, but at the same time, I just want to make someone's investing career give them the tools and information needed to make the right decisions for themselves. If the right decision is coming to me and saying, what are the right types of investments for a retirement account? And I can help you and let you know that we look specifically for those types of investments. But if you want to go on your own path and you want to take the information and use it to make your own decisions, by all means. I just want to be a facilitator, someone who can help out others, and really be known as someone who's willing to work with others to enable that.
Fantastic. That is beautiful. So, of course, Josh, I want to say a big thank you again for being today on episode. As I said before, I mean, there is some great information that you provided, and I don't have a lot of people, on the show who are talking about investing in multifamily deals through a retirement account. So I'm very happy that I had you on. And again, I'm sure for the audience who are watching, you're coming across this type of investing strategy maybe for the first time. So I definitely encourage you to get in contact with Josh and ask him some great questions. Again, the Instagram, Facebook, LinkedIn is going to be there down below. So make sure to hit it up and send him a message, send him some questions, toward his way. And I'm sure he will spare you, some time talking with you, maybe jumping on a call and just talking some ways that you can invest with your retirement account in this great asset class that's called multifamily. So yeah, I appreciate you, Josh. I mean, great information. So thank you for being today.
Thank you very much for having me. I appreciate it.
Thank you. And guys and girls, before you're going to go, as always, just one thing that I wanted to ask you. If you shared this episode with a friend of yours, maybe who has the retirement account, of course, and looking to invest in multifamily deals or just the different asset classes, and pass this episode along to them. Josh, again, appreciate you being today on episode. And as always, I'll see you next time. Thanks for watching.
Thanks.